Welcome back, traders. Today I have the privilege of introducing you to Paolo Flores. Not only has Paolo achieved a high level of success as a funded trader himself, he's also had a hand in helping other traders step up their game. So grab your notepad, bookmark the replay link. You're not going to want to miss a moment of what he has in store for you, not if you're looking to bring home the bacon. Now, as we go through towards the end of the show, we're going to be giving away some evaluations, once again, from Apex Trader Funding. So stick around for that. There's going to be a form in the chat. Make sure you just take a quick moment and fill that out so you have an option to win those. And we're also going to be doing a special Benzinga only 70% off any size evaluation today with Apex Trader Funding. Coupon code Benzinga. So make sure you jot that down and make sure you step in today. My name is Gates W. Adams, and I'm your host. Welcome to the second episode of the Trader Bacon Show. Excuse me.
Welcome to the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Are you ready? Because the Trader Bacon Show starts right now.
Paolo, welcome. Good morning. How are you?
Good morning. Thank you for having me on. What's going on, guys?
It's a pleasure, man. We're glad to have you here. So you and I have had a chance to chat before, which puts me in a unique position of knowing that you've got some great stuff in store for us today, which I know that we are really, really excited to present and show to some other traders. But before we jump into all of that, let's learn a little bit more about you and kind of your journey and where you are kind of in that process. So tell us a little bit about your background as a trader. How long have you been trading? Kind of what did that process look like for you?
All right. Thank you once again for having me. So I've been trading, I want to say about a little over 10 years, but not consistently. So with literally no direction. So immediately, I want to say a few years after high school, I joined the service and I served and did a couple tours. After my tours, I went to civilian contracting, where the business of war was actually, pretty decent, but until it wasn't. And after that, it was, I hit a rough patch in my life to where you can't really transition into the civilian sector and say, hey, I'm like an M4 expert. Like, it doesn't really work out that way, So I did the whole school thing. I got my undergrad, and then I got my master's degree. My undergrad was in psychology, and then my master's degree was in counseling. But I found real quickly that you needed like a whole lot of internship hours. So after 8 years of school, they wanted me to do more, like a few more years of internship where you're not really getting paid. And as a person that's transitioning from getting active pay to, working $12, $15 an hour is not really a life that I wanted to live. So I was blessed enough to encounter a friend that I met overseas that got out before me and helped me transition into a government position. And obviously through the global pandemic, hit and they sent everybody home. And this is where I kind of, with all that extra time, I got into the crypto space rather early. My 401k had no penalties to pull out early. So I went ahead and took a big risk. I pulled my 401k, started investing into a lot of crypto coins. And, to be honest, I didn't really know what I was doing, but I was lucky enough to where in that bull market, you could literally just close your eyes and hit the long or buy whatever, and you made money, And it wasn't until the bear market that it really woke me up to be like, hey, I really need to take this seriously. And I had trading knowledge before, but with no clear direction. I would look at a chart and be like, well, this looks good, So I had the experience, I knew how to read candlesticks, but I wanted an actual formal education. I went around YouTube, and that's probably the worst place to look for education. But after a few groups, I'm not going to lie to anyone. I'm going to be super transparent. I was looking for signals, right? I wanted somebody to do the work for me. But I got into a group that I am now part of a coach now. I'm an analyst and coach at Chart Champions. And it's been great since. But as I continued to grow in my trading experience, I wanted to get everything from the source, because if you take time to look at the trading space in general, whether it be Twitter or YouTube, a lot of it's regurgitated like information that everybody else throws. Nobody really goes to the source. Nobody really goes to the actual, I guess, data or statistics or strategies that the people in the pit were doing, like the floor traders back in the 70s and 80s. So that's when I actually, took the time to pick up a book. The book I started off with, because most people, like if they're in the trading space, guarantee you they're all going to say Trading Wizards, which is a great book. I'm not going to knock on it. I think it's a great book, but it doesn't teach you anything technical. Everything is all psychological. So I picked up a book. It's called Mind Over Markets and also Markets in Profile. It's by Jim Dalton. And my trading strategy revolves all around profile trading. And this really helped me in the crypto space. But unfortunately, due to the, being an American, due to the lack of regulation, it did. I had money invested in FTX and also in Voyager, where I lost literally almost $1.3 million. So it was a lot, and it took a heavy toll on me psychologically.
Sure.
So at that point, I had to rethink my strategy, and this is where the props firm space came in, which I think is an amazing opportunity. I never knew that it existed. I just started Googling everywhere, and then obviously with the algorithms, I ran into a few prop firms, most of which are in the Forex space, unfortunately, and it doesn't translate well to my trading strategy, because if most of you know that trade the Forex space, which is a very large space, very popular space, there's a lot of spreads on there. Like, so low time frame scalping is not really helpful. The data is pulled off brokers such as 8cap and other things like that, which I don't find very like a good liquidity pool and things of that nature. So over some time, I got like an advertisement through Apex. I was like, oh, what's this? Futures. So I looked into it. And there's also other futures brokers out there, but I looked into it and I was like, there's no way that there's no spread on this. Like, there's gotta be no way. And what you see on TradingView, if you purchase the CME package on TradingView, and once you connect to the Apex broker or any futures broker, you will see it's tick for tick. It's not like what you trade on MT4, MT5, whereas there's huge spreads, and you have to trade the Forex pair, which is like the US 500, the SPX, and all those ridiculous other pairs. I'm all about futures, because what I see on the chart and what I enter is what I want to get filled at, especially if I'm taking profit at levels that respect technical analysis, which is what we'll get into in a little bit here. So also the greatest thing about it, in my opinion, is the regulatory clarity surrounding it, especially as an American. There was a lot of issues surrounding crypto in the crypto space, even till right now. But if you're in the UK or outside, everything's great because there's regulatory clarity there. Even in the Forex space, the Forex space is not very clear on its regulatory clarity. And I don't play with small money, so I'm not going to make that same mistake that I did in the crypto space. So with futures, there's a lot of regulatory clarity. There's this an IRS section 1256 that you guys can look up all you want. But I always say to myself, if you're going to play with money, there's always an inherent risk to everything, right? But when it comes to taking that risk, you also want to play in probabilities. That's how trading works anyway. And I want to, if I'm going to lose it, I want it to be losing less and winning big. So
right. Well, that's awesome. Obviously, every trader's got their path and their journey in, and I mean, you want to talk about a pretty major setback. First of all, my hat's off to you for getting back in the game so quickly. Some of us take a couple of decades or more to get back in after devastating challenges like that. And of course, we pay the price. We don't have that opportunity. So as we start to kind of get into some of the things that you're going to show us today about how you do some of your trading decisions, of course, I want to, reiterate the fact that this is not to be mistaken for trading advice or financial advice. This is, of course, for entertainment purposes only. If you happen to learn something from it, fantastic. I also want to point out, if you like what you see from Paolo today, Check him out on Twitter at Paolo Flores85 and follow him there. And you can get more of what he's about to share with you as well. So, Paolo, we've got your charts up here. Let's take a look at what you've got on here and show us what it is that's really been the key for you in managing that risk and getting to that higher level of success.
Absolutely. So the bread and butter of my trading style is what you call profile trading. And most of the time when people utilize the term profile, they'll refer to as the volume profile, where in my opinion, it's an incomplete picture of trading in general. Because obviously if you pull a fixed range, what most TradingView has, and I can show you here on TradingView, it's just the volume that you see. You never really see the market profile, and most people don't really understand market profile. Where and another mistake that they make is they call market profile the volume profile. So where market profile actually goes into time, and I believe, in my opinion, that volume and time work collaboratively with each other. So I normally start my day intraday. Since I'm an intraday scalper, I mark previous day levels on price action. So you can see here, there's a previous day high, the EQ, which is the middle, and then the low. Obviously, it's kind of wonky on TradingView today because of the holiday from yesterday. So it's combining both days. But the indicator I use for fixed ranges is just a session volume profile where it pulls the entire session of the day. I'm a type of person that loves to understand what I'm using, okay? I don't like putting something on my chart and not understanding it. Like case in point, like most people don't even understand what a value area high or value area low is. So a value area high and a value area low is the 70% data in relation to the point of control, which is the highest volume node in relation to volume. So with that being said, I pull that intraday, and profile trading in itself is a dance of balance. That's really what it is. So if people understand this concept that trading is just an auction, okay, it's buyers versus sellers. You'll hear random terms like price action, fair value gaps, all this pizzazz, right? But in reality, all it is just an auction process. And who's going to win, the buyers or the sellers? And you cannot do that just on a chart like this. In my opinion, you need all the data. You need the market depth, you need the time in sales, you need the footprint, and you also need the levels, okay? And you also need the sessions, which is in time, which I'll get to in a second. So when you see the dance of balance, all it is if price is going to remain in balance, it's going to remain inside the value areas, okay? If it's outside the value areas, it's what you call starting to break balance. And you can tell it's starting to break balance by value building under the value area low. So you can see here, just even on just current price action, right? You were maintaining balance within the profile, and then it failed to rotate, because normally how it works is if you're at a value area high and you are not creating an imbalance, okay, it's just going to rotate back into balance where you would target the point of control. And then from the point of control, you target the opposite side of the value area. Okay, so that would be from value area high to point of control to value area low. Now, if the value area high bounces off, rejects within balance and maintains support at the point of control, that's what you call a failure to rotate, where you would look for a brand new high. That's what you would look for in theory. But what I'm showing you here is relatively only on the volume-based part of the structure, okay? It doesn't account for the time, where the market profile will actually show you in the sessions, because floor traders, the OG people in the pit, they didn't have charts like this, okay? They based everything off people's emotions and their faces, and also the sessions based off time, which I'll get into in a second. But in theory, okay, if price itself is in an auction that is relative based on equal buys and sells, you will maintain neutral balance between the two value areas, where most traders will call this, oh, it's a choppy day. It's not a choppy day. It's just a balanced profile where you can trade. You would just pull a short from the value area high or a long at the value area low. Well, how will you know, however, if price is going to break balance and start trending in a certain direction? Most people will say, oh, you can look at the footprint, which is true. I still use footprint as well, which I'll get into in a second. But you won't know that without the hard data, Okay, you won't know, and you could see the hard data from the actual footprints itself, which is here. This is a footprint data. This, like right now, this is an auction process. This is the actual low right now on a 5 minute, right? So you could see right here, these are the closes, the opens and closes, and then these are the wicks. But you can tell right here, right now, that price, as we were coming down, right, the session delta is, just a quick background real quick. One ES Mini, which I trade, I primarily trade the ES Mini. One contract is a nominal value of a little over 200,000. So you can kind of say, like, you know, that's a lot of money being traded throughout the day, right? So the delta itself on the upper portion right here is the contracts that are closing and that are being transacted in the 5 minute candle, because this is a 5 minute profile, right? And then the session delta is the total amount for the session, which is New York. Okay. And obviously volume right here is the amount being traded in that candle itself. So for instance, that current candle right now, we're trading at 6,400 contracts, right? And our session delta obviously is still negative. So the sellers are in control. Now you're looking at this only on the volume side. So you can say to yourself, hey, look, sellers are in control. Negative, the session delta is negative. So the sellers are selling, but we just only spoke on the volume side of things. We never looked at the time-based things. So this is where the market profile works in collaboration with volume. So right here, you have what you call a market profile. And people look at this and they're like, oh my goodness, I don't understand it. But I can help kind of show how to spot a trending market versus an inside day, okay? So a market profile, okay, is only utilized, in my opinion, okay, on the New York session, okay? And why the New York session, you say? The New York session, because that's when the market's open and New York is king. So back here on volume, right, you can see the volume, say 20,000, 24,000, 34,000. On pre-market data, this is pre-market, we were up here pre-market, you could see that volume is only at 1,000, 2,600, 2,300, 1,900. And immediately on New York open, right here, you have 10,000 to 45,000. And these are 5 minute candles. This is the New York open. So right. I don't look at market profile at all after hours. I don't even bother with it. Some people do, not to say it's incorrect, but it'll show you that based on the weight of volume, okay, in relation to time for the sessions, who's in control. Because the whole purpose of volume is to see where the executed trades are at. And the purpose of market profile is to see who's in control, okay? So here on the market profile, right? The A session is the first 30 minutes of New York, okay? The B session is the next 30 minutes of New York. And this is what you call your initial balance, okay? You have your IB high, which is right here, and your IB low, okay? Your next following session, C and D, you know, you got to do your ABCs. These are all the 30-minute sessions for each structure. This will show you whether or not we're having an quote unquote inside day, or if we're going to start one time framing in either direction, right? So you can see here, this was on the 13th, you have an inside day. These value areas and point of controls are based on time, not volume. So you can see that C session right here, that opened right here. So the color structure, I'll kind of give an example what the color structures are. A is green, B is blue, obviously. So the first 30 minutes, right? And this next 30 minutes, the initial balance. Red corresponds to the point of control via time. Baby blue represents value area high and value area low, which is 70% of the data that's pulled in based on time. And the whites are the opens of the session, okay? So you can clearly see here after the initial balance, this tells you what? Okay, my initial balance high is around 44.24 and my initial balance low is 43.92. If you start opening sessions below the IB low, then you're likely going to start downtrending. If you're opening sessions above the IB high and closing sessions there, you're likely going to be uptrending. So this kind of gives that whole picture to where, hey, stop shorting, because I know people, I think it was on Thursday, we were one time framing. I know that most people are trying to either jump on the train on a quote unquote breakout, or they were trying to short every move and they were getting wrecked, okay? This gives that clear picture. So we can go to the next session. Actually, we'll go to Thursday. So it'll give that clear picture for you guys. You can see here on the holiday wasn't a whole lot.
Yeah.
So
now, now, if you're pulling that up real quick, Paolo, if I can just kind of real quick question. Obviously, you trade ES, and obviously you have your system for entries and exits.
Yes.
It looks to me like this is something that could absolutely be used on, with different strategies, just adding this particular information to know whatever entry you're looking for, whatever your strategy is, having access to this kind of information and understanding what this means can absolutely help make better decisions on whatever trading strategy you're using. Is that a fair assessment?
Oh, absolutely. Because I know here, like my number one goal is to never knock on someone's strategy. Okay. Because I know people that, that don't utilize this strategy. They use basic trend lines. They're breakout traders, which I don't like. And I don't think it's an effective way, but they're very profitable. The key here is between a profitable trader versus a person who's not profitable is just the money management side of things.
Sure.
Because I could honestly enter for somebody the best entry in the world, but it's up to them how they exit, how they manage their trade. And most of them, unfortunately, will likely turn that winning trade to a losing trade because they don't understand how to manage the trade.
Sure.
But for myself, the way my behaviors are, I like to know what I'm doing, and I don't want to just say, hey, look, there's a channel here that's being respected because it's touching, but it's not telling me why. I need concrete evidence. I also need data supporting that in order for me to formulate a plan to see whether or not I'm going to be invalidated in that plan. Because if there is an entry that I'm looking for, whether it be a long or short, right? Let's say on a 5-minute candle that's closed. Like we'll just use this for example, right? You have 958 contracts closed here at the low, and you have 2 5-minute candles closed above it. So this tells me about 1,000 contracts that are closed at the bottom. So that gives, if I decide to enter here, okay, based on where we are on the volume profile and also on the time-based profile, do I have a plan to set an invalidation for a scalp? Because most people don't understand that, the ES moves in ticks, right? So you enter one contract, a 1-point move is $50 because each tick, which 4 ticks in 1 point, is $12.50. Like that move right there for 1 point. If you're pulling a low time frame scalp, if you could do that once every hour, that's $100 an hour. Like I don't know a lot of people that make that in the retail space, So it has to be realistic expectations when you're pulling a low time frame scalp. However, this also works in relation to a high time frame structure. You just have to use high time frame candle closes,
Right.
So for back to the one time framing here, you could clearly see here that on the open where you can see, hopefully this is not too small for you guys to see here. You have the open on New York, and you have that opening drive where it just skyrocketed. And then you have the initial balance low right here at 44.06, and the initial balance high at 44.42. You had the C session that opened at the high, came back and tested the value area low and started one time framing completely to the upside. So this tells me most of the value right here, you have D, E, F, G, H, all building above the IB high. I already know this is going to be one time framing and we're going to look for higher, because I don't need to know whether or not I'm right or wrong. I just need somebody else to do the work for me. Could have this dumped? Absolutely. But where would I be entering in that position? I would allow, let's say this same structure happened based on time, where you had all this value building above here, above the IB high. I would just wait for session closes below all of these trapped positions. But how will you know they're trapped? Well, you look at your data on your low time frame delta to see if positive delta is trapped at the highest. Now, once we start deviating below this node, well, this cluster of trades here, this is what, 30 minutes, an hour, hour and a half, 2 hours, 2.5 hours, 3 hours. So 3 hours of price action. Look at your positive delta and you start trending below, and then start closing sessions based on time, all those trapped buyers at the highs, and then the retests, right, at levels based on volume, and the delta showing weaker attempts at the highs, you now have a position to take a short. Right. But if you find value, continuing to find value to the high, you're going to see higher. This, for me, it's hard for me to look at let's say a chart like on TradingView here, and each corresponding candle, like if you look at each corresponding candle, this is on the 15-minute. You could say here, right, you have people that do TA like, hey, look, it's a fair value gap like this. Like, I don't know what's inside this candle. I have no idea. So I don't formulate trading plans based off candle structures that don't show me anything. So you can see here right now, just happened right now. So you have your value areas shifting because the point of control shifted. So the point of control was here. The point of control just shifted because this is now the highest volume node based on time. You're now within balance, but early signs of failing to rotate. So if we cannot close above this, we're going to start seeing lower price action. So the reason why I utilize data such as this is because it gives me an invalidation on trading. It's not gambling. Like, I don't want to, because, you know, you cannot formulate a trading plan based on what you want to see, what you want to happen, and what you think should happen. Because, you know, we have news traders, oh yeah, you know, 25 basis points, it's going to be bearish. Like, I don't really care what it does. I just know it's coming, right? So the volatility is coming, but the data is going to show you what's going to happen. On the right here, on the far right here, this is what you call your market depth. Okay, it's the DOM. This shows me the limit orders that are coming in, right? So I can see what kind of players are playing in this sector right here. To the far right is what you call your tape. It's the time in sales. These are the executed orders based on the DOM. So these are the completed executed orders. So I have this set to where it will alert me if a large order comes in, and I have it set to 100. So anything that comes in with, let's say, a single 100 contract order will alert me. So if you're hitting, say, resistance or support, let's just say support or resistance. We'll talk about this current price action here on the 1 minute chart. So let's say right here, right? There was an alert down here because there was a single order of 400. Okay, on that 900 candle that we saw here. I'm sorry, right here, you see these cells here at the bottom. I had an alert pop off earlier to show me, oh man, you got aggressive sells at the bottom. You simply don't touch that because you don't know if they're going to bring price down. What you can do, however, is allow somebody else to do work for you, because there's thousands of traders, if not millions of traders in here, millions of algorithms that are doing all the work for you. All you need to do is wait for price to deviate above price action, knowing that there's trap positions at the lows. Now you have a tight invalidation based on ticks or price, however you want to look at it. And then you have realistic targets to the upside, because you never want to ignore market structure, because right now market structure is still pretty bearish. On the 1 minute, yes, we're making higher highs, higher lows. 5 minute, higher highs, higher lows. But on the 15 minute, it's still pretty bearish, because you can see here this massive downtrend still. So that's why I love utilizing data, because it allows me to formulate a plan. That way I can say to myself, because all trading is, right, like I said, it's an auction process. And all you want to do is trade in probabilities, because I don't know anything. Even with the hard data, I never know what's going to happen, right? I can't tell the future. There's no crystal ball. But what you can do, however, is when you trade in probabilities, you can say to yourself, okay, this is a trade that I've accepted the loss if it does, you know, and I'm going to trade in the probability that I'm going to lose less and win big. And if you follow that plan, you will always win, because most of the time there's only two ways people lose, is because they marry their trade and they don't want to be wrong. And they base it off hope, you know, like, I hope it comes back. Hope is not a trading plan. It's not a strategy, you know. And the last one is they get emotional and they get on tilt, so they don't follow any trading rules. Because in reality, trading, it's one of those things that is going to really expose who you are as a person, you know, like it's going to expose the worst things in you, things you never knew about yourself, you know. That's why the space is riddled with psychology, you know, granted, rightfully so. But if you know yourself very well, you know, and then you come in here saying, and you don't have any set trading rules. Like for myself, if I lose 3 in a row, you know, I take a break. It doesn't matter if I've been killing it. I lose 3 in a row, I will take a break. And then I will just come back later with a fresh set of eyes.
Well, that's awesome, and I know that there's probably hours upon hours of more that you could go through on this, and unfortunately, we don't have that kind of time. Yeah. But as I mentioned before, if you want more from Paolo and you want to check out what he's doing and get a better idea, I hope you took my advice. I hope you guys got your notebooks out. But just remember, you can always come back just straight back to the same link here for the replay. And you can watch this over and over, because there's some pretty high level stuff in here. And if you didn't get it the first time, you're definitely going to want to come back and make sure that this is an opportunity for you to really dig in and dig deep and replay this as many times as you need to until some of these things become clear. Make sure you check out Paolo on Twitter at Paolo Flores 85. I do believe that we're looking at about time for the giveaways. I know that there's some hot comments about the giveaways, so let's take a look at that. And Jeremy, Paolo Flores 85. It's up in the chat in the comments. You should be able to see that in there as well. So grab that. Make sure you get that copied in somewhere as well, so that you can follow Paolo there. And Zunaid, we'll hand it off. Let's see what we've got for the folks online.
All right, appreciate it. We're going to go ahead and quickly, let me make this one a little bit more interesting. We're going to try to do things a little bit different. So here's everyone that did go ahead and fill out the giveaway. We're just going to go ahead and let this little machine tell us who the 3 winners are, right? That way there's no bias. Make it a little easy and fun. And by the way, if your name does get selected, I will email you by the end of day. Which way did it go? There we go. We got it.
Wow. Down to it, huh?
Yep, and we're going to go and remove this person so that we can give someone else a chance. Go ahead and see who the second person is going to be. This is like winning the lottery, except your odds are a lot better. Maybe you didn't remove it properly. That one's not going to count. We're going to remove that person. Do it again for the second time. By the way, do you stream, Mr. Flores, so that folks can catch you live?
I do, but it's through our membership here at
So definitely check that out if that's something y'all are interested in. And then one last one here before we wrap things up. And again, we will go ahead and do this again next week on Monday. So make sure you guys go ahead, and there is your 3rd winner. So again, by the end of the day, you can expect an email from me. Make sure the email address that you put hopefully is valid. And we'll go ahead and stop sharing that screen here. But yeah, appreciate you, Gates. Appreciate you, Mr. Flores, for hanging out with us. And we'll be back again next week on Monday at 11 a.m. Eastern Standard Time. I know we've got an idea of who our guests will be, but make sure you follow socials and we can go ahead and get things going there. But I'll go ahead and take a back seat here, Gates. You can go ahead and wrap up the show.
Awesome. Well, first and foremost, Paolo, thank you. Again, unbelievable information. And I know people can get more information about what you guys do over at your Twitter. So make sure to check him out. Of course, you can always check me out at GAC Trading Pro as well. And thanks once again to our sponsor, Apex Trader Funding. Remember, 70% off any size evaluation today, only from this show. Use promo code Benzinga. Make sure, and that is today only. So make sure you get in there before end of day and grab some evaluations for yourself. And best of trading to you guys. I love you guys. I appreciate y'all. Thanks for showing up. We'll see you Monday, 11 a.m. Eastern.
Welcome to the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon.